All right, guys, we're going to dive into homeowners insurance in this video. Now, homeowners insurance works very similarly to the other types that we've already discussed, but there are just a few additional details that we want to cover. So, obviously, homeowners insurance covers and protects against loss on the exterior or the interior of the home. This could be due to fire, theft, windstorms, for example, any other type of damage like that. Your fence blows down, you need to there's hail and you need to replace your roof. There's a theft inside, they rob some personal items, right? All these things can be covered within the policy, including separate structures. So if you have a shed or detached garage or something like that, they usually have a separate piece carved out for that separate or detached structure. And then also it covers personal property. So they'll give a certain amount of personal property that can be replaced. So typically things you might want to list on there to make sure that you get replaced, right? It could be like jewelry or family heirlooms or personal property that has significant value or emotional significance that you might want, it has some value you want to insure against. So there's usually a piece carved out to replace personal property, maybe your computer is stolen or, things like that. Some types of coverage require additional specialized policies. Okay, so typically things that are not covered within a normal homeowners insurance policy would be floods, earthquakes, sometimes hurricanes. Tornadoes typically are, because they're kind of classified as windstorms, and windstorms generally are included in normal homeowner policies. But if you live in an area that experiences floods or earthquakes or hurricanes, then you might want to look into additional coverage because of the risk, just depending on the risk factors, where you live, how often it happens, the damage that happens. Those policies can range in cost. Sometimes they can be pretty expensive, other times not. So you have to work with somebody in your area to figure out if that makes sense for you or not. So there are typically three types of coverage that you can get. There's actual cash value, which, as I described in previous videos, covers the actual value of the item as it is now. So if it's used, it has less value than if it was brand new. So actual cash value, that obviously is the lowest amount of coverage, because typically to go out and then actually replace the item, you're going to have to put some money out of pocket. Okay, so they're just going to compensate for the loss, and then they're not going to make you completely whole by replacing the item. You're going to have to use money out of pocket to go finish replacing the item and buy new items. Replacement cost is they will actually pay for the replacement. Okay, so if you lose whatever item, no matter how old it is or the current value or condition of it, they will pay for you to go and replace it with a brand new item, and they'll typically set limits there, but they'll pay for the replacement cost. That coverage is obviously a little bit more expensive. And then you have guaranteed replacement cost or extended replacement cost. This, even if it goes above coverage limits, this accounts for inflation. And so that's the highest cost type of coverage, right? Because you might have a certain amount of coverage for certain items that is in there, but based on how things are actually priced nowadays, inflation drives the cost of things up. If those items actually cost above the coverage amount, this guaranteed replacement cost will account for that and will still cover the brand new replacement cost based on if the cost actually has gone above coverage limits. Okay, so that they'll go above their own limits, and that's why that one costs so much. Okay, so just a few things to keep in mind here. These are all things that can happen to the property, damage or theft or whatever, loss. There's also the liability coverage, right? So let's say it's icy in the winter, got ice on your doorstep, and somebody walks up, they slip on the ice, fall on the stairs, and hurt themselves, right? They decide to sue you. That is where liability coverage comes in. So just like with auto or renters, you're not covering the cost of a loss of an item or property. You're protecting yourself against civil lawsuits, liability. That can happen. Maybe neighborhood kids are jumping on the trampoline and one falls off, breaks an arm or something, and their family sues you, right? These are all obviously kind of worst case scenarios, probability low. But if something like this happened, it does happen. So it's nice to have coverage. You can get coverage for those types of things. So here are some keynotes, takeaways for you as you move on. So number one, you want to make sure that currently the replacement value of your home is up to date with the actual value of your home. So within the last couple of years, property values have risen significantly in many parts of the country. And so you want to make sure that your policy is keeping up with that. Usually there's adjustments year by year, but they've risen so much, it's smart to just go check and say, hey, my property probably costs about this much now. It'd cost this much to replace it. If it burned down or whatever, what is my coverage? Can you up it and make sure that it matches the actual current value of my home? If something does happen to your home and, let's say there's a fire or something like that, they will typically pay for you to live somewhere else, a hotel or rent a home while your home is being repaired or rebuilt. That insurance coverage is also a piece of this, right? If they'll pay to replace the home and they'll pay to have you sometimes, right? Just check your coverage. They'll pay for you to stay somewhere else, you and your family to stay somewhere else while they're repairing the home or rebuilding it, okay? Whatever the case might be. But make sure the replacement value of the home is up to date with the actual value of your home. Liability coverage, you typically want to increase that. $300,000 is a good amount. You can do as high as $500,000 sometimes. Medical payments to others is a very small coverage amount. Typically the max is $5,000, could be a little bit more. So just check with your policy specifics or shop out quotes on that. If you, again, same thing with the auto insurance. If increasing these limits means that you actually end up paying a lot more in a premium, you can have a couple options. You can go shop around and maybe you'll find better coverage for less. I actually recently did that. I had homeowners insurance for a long time through the same company. I thought it was good coverage. I thought it was a reasonable price, but I went and shopped around and actually found one that offered me better coverage for less money. So you never know what you're going to find. I thought it was pretty good, but I actually found better. And so shop around, get quotes, look at the different coverage amounts, and find the right fit for you. And it's not a bad idea to do that on occasion every couple of years because prices increase, especially if you have a claim against your home. Sometimes your premiums can go up, right? Your current insurance company will be like, oh, that's higher risk and we had to pay out. We're going to increase your premiums. That might be a good time to, after a little while, to go out and get quotes and see what other policies are offering. But as it is, if your premium increases with increased coverage, sometimes you can just raise the deductible to offset that premium. So as long as you have the cash flow to take care of anything below, in that deductible range, then you should be okay. Commonly, deductibles for homeowners would be like $1,000 or $5,000. Every time you file a claim that might ding you, the insurance company sees that and they could raise your rates, like I mentioned. And so depending on the type of damage, you may want to file a claim or you may not, right? It may not be worth it to file a claim because you would pay for it anyways with your deductible. But if you file the claim, they're going to likely raise your rates. So if it's a small thing that happened, some minor roof damage or a fence blew down, you have to replace it, it's a couple $100s. That might be worth not filing the claim and just paying for it out of pocket. If it's something bigger that caused extended damage or something like that, then it'd be worth, filing the claim, paying your deductible because you know that the insurance company is going to pay above and beyond that to replace items or, make you whole. So something to keep in mind, but you certainly have that option. Just get different quotes and work with an agent on that. All right, that covers homeowners insurance. We're going to continue on to the next type of insurance.
Protect your home, protect your peace of mind.